It is officially FOMC week, and in this video we're going to be discussing the expectations on the key events and what's to come. We're also going to be conducting a scenario analysis to uncover the possible outcomes and how the market can react based on those key expectations that may arise. So stay tuned till the very end, as we will also provide our analysis and give you what we believe on what can occur and what is likely to happen based on the overall dynamics in the current marketplace. So let's get into it. So the interest rate announcement is expected to occur tomorrow at 2 p.m. Eastern Time. It is followed by a press conference that will occur at 2:30 Eastern Time Zone, and this is when Powell will do a Q&A and also provide his guidance on the economy and share his expectations with future interest rate policy. Now, the key thing here is that a lot of analysts expect a 25 basis point hike in the overall market, but based on what is going on with the regional banks and the collapse of most recently First Republic Bank, a lot of Congress officials have been urging Powell to halt future interest rate hikes. So there's a lot of risk currently in the marketplace, and based on these situations that are occurring, the market is unable to sustainably handle future interest rate hikes. So let's get into one of the key scenarios on where SPX can go based on the issues that may occur. So we're going to be sharing 3 key scenarios and possible outcomes on how this can affect SPX. So first situation, there's no rate hike that happens. Now, if this was to occur, this would probably be the best catalyst for the overall market, because officially the market does expect a 25 basis point hike, and with no rate hike at all, this will definitely be a major relief for regional banks. Most recently, Western Alliance Bank, which is a regional bank under the ticker name WAL, has been struggling and seen a low of more than 20% plus today. So if this was to occur, regional banks would definitely prosper from this, and the market would have a sense of relief knowing that the feds are going to be there to protect regional banks and protect the financial collapse from happening. So this will definitely avoid that from happening. Now, second scenario is, what if there's a 25 basis point hike? Now, in this situation, the market, we believe, will break 4,100, and we will break today's low. We could possibly see 40.50. Now, in this event, you have the opportunity to play both sides of the market. You can definitely play the upside temporarily and the downside as well. We expect a 25 basis point hike to be a very choppy market and one that is extremely volatile of both sides. So you definitely want to be careful of your key gamma levels and watch out for all situations to happen. But we do give the edge to the downside, but we do see an initial pop that will occur with a 25 basis point hike. So the key thing here is you want to watch how banks are moving in reaction to another 25 basis point hike. Now, the third possibility is a 50 basis point hike. Now, this is the most unlikely situation to occur, but if it does, we're going to see a significant trend down day, and we're going to see SPX probably retest 3,900 in one single day and have multiple consecutive down days going forward. Now, this will probably be the best thing for inflation to move lower, but it'll definitely affect regional banks and can also cause a financial collapse to occur within the finance industry. So it is unlikely to happen, but it's very possible to happen, and we can see SPX really get destroyed under that key scenario. So here's our current expectations and what I personally believe will occur at the FOMC interest rate announcement. So for many of my followers and for many people in my community, you guys have seen me successfully trade the FOMC weeks numerous of times. I am a perfectionist when it comes to trading the federal fund rate policy decisions, and I understand fluently how to navigate the markets once the policy has been announced. So that's one of my expertise and one of the key things that definitely does benefit me when it comes to trading. Now, the thing that I believe is that at first, my initial reaction was that the Feds will do a 25 basis point hike. Powell has pretty much been emphasizing this continuously going forward. But based on today's market reaction and how weak regional banks were moving, I believe that the Feds will probably leave rates unchanged, but also give a guidance saying that future rate hikes are warranted. So they'll definitely pause for now, give the market a breather that it may need, and we can see SPX pretty much test at 4,200, and we have a weekly high range of 4,230. So I believe that is likely to happen based on what is happening with regional banks. But still the risk of a 25 basis point can happen. But at this time, I think the Feds are going to leave rates unchanged, navigate the waters, see how regional banks are doing, because with a debt ceiling issue coming along and Janet Yellen warning Congress and the Senate that the U.S. government may possibly default on June the 1st, the Feds will definitely most likely pause interest rate hikes until a official debt ceiling has been increased. So that is what I personally believe will likely happen based on the overall situation. Now, other than that, we do have Apple earnings that will happen the following day, and that will occur after market. So those are the two biggest catalysts we have this week. The SPX can definitely trail towards our high of the week, which is at 4,235, and we see that as a strong possibility to happen. But as a trader, you want to make sure you navigate your positions effectively. Now, my strategy when it comes to trading these FOMC, I usually have two positions that I jump into. My first position is going to be one that is a lower capital size, because usually that first position is to test the waters, and it's usually prior to the announcement. If it's after the announcement, then that smaller position is likely to happen because of mixed reactions that may occur. My second position that I normally jump into is one that I have a higher capital and more confidence to jump into. So that's usually how I trade FOMC, and many members in my chat room have successfully managed to navigate the markets during these times. So I hope you guys enjoyed this informative discussion on the FOMC interest rate announcement. Stay with us and join our free Discord to be a part of our community. We share a lot of insights and great trades amongst our community, and we've seen a lot of success occur in our channel. So if you guys want to join, the link is in the description below, and we look forward to seeing you guys in our community. So take care, guys, and have a good luck when it comes to trading the FOMC interest rate announcement.